Hello everyone. Welcome to this video and this is brought to you by Krypto. So today we're going to learn about the moving average convergence divergence trading technique. So I'm going to explain the basics to you and how to use it within the Krypto app. So let's dive in. So this is a technical indicator that's used to identify moving averages that are indicating a new trend. So you can find new trends using the MACD trading technique. So it's going to determine whether the market right now it's bullish or bearish. So let's see how do we find a trend using this algorithm or technique, sorry. So let's look into what the MACD chart over here says. And usually we use three numbers that are used for its settings. So the first number is the number of periods that are used to calculate the fast moving average. The second number of periods that are used is the slower moving average. And the third number is the number of bars that are used to calculate the moving average of the difference between the faster and the slower averages. So let's see further. How do I explain it better to you? I'm just going to take an example. So usually the numbers which a lot of charting softwares use for the MACD are 12, 16, and 9. And these are the common MACD parameters. So the 12 represents the previous 12 bars of the moving fast average. 26 represents the 26 bars of the slower moving average. And this makes sense because it's a slower moving average. So obviously the period has to be bigger because it has to cover a longer period of time as compared to the faster moving average. And we have the 9, which represents the 9 bars of the difference between the two moving averages over time. And this difference is plotted by using a histogram. All right, the green lines in the chart. Okay, so let's see how to use this trading technique called MACD. So, because there are two moving averages with different speed, the faster one will obviously be quicker to react to the price movement than the slower one. And that's how we would differentiate between the older trend and the newer trend. So, when a trend occurs, the fast line will react first and it eventually cross the slower line. As you can see what's happening here, as a new trend is discovered, like if we see this part, there's this trend going on and then there's a new trend which is like upcoming. So this basically shows us that a new trend is going to happen and the prices of the value is going to rise eventually, so you can maybe buy at this point because the blue line indicates the faster moving it's the faster moving price, so it's going to tell you about the trends, whereas the slow moving average is used to make note of the older trend so that we can compare the two of them and find out the newer trend. All right, so when this crossover occurs, the fast line starts to diverge, as you can see here, and or move away from the slower line, and it often indicates a new trend, as I said. And from the chart beside, we can see all of these things, and I've shown this to you correctly. So what are the insights that you can get from these things? So notice that the lines, when they are crossed, the histogram like disappears for a while. As you can see here, this is because at this point, the average is almost the same and the difference would be 0. And as a downtrend begins, the fast line diverges away from the slow and the histogram gets bigger, which is a good indication of a strong trend. So what it means is basically, if you noted here, this is a converging point and this is diverging, and this part indicates a strong trend, and the histogram also indicates a higher magnitude of positivity here, which means that it's going to rise up soon. So Yeah, that's what it indicates as compared to the older trend, which shows us this slower moving average. So let's see how to use this trend in the crypto app now. This is the crypto app and this is the exchange screen. So let's go on stats and you have the BTC slash INR chart. And let's go on FX indicators and select MACD. And we have MACD. And we have the histogram over here. We have the red line and the blue line. The blue line indicates the faster moving average and the red line indicates the slower moving average. So whenever both of these lines converge with each other and then diverge again, that means it's the start of a new trend. So you have to keep that in mind because that means that it wouldn't follow the trend it was following before and you would have to take a different path. So a lot of you must have noticed that MACD sounds a lot like MACD, which is McDonald's. So that's pretty funny actually. I find it funny. All right, then let's see you in the next video. And please subscribe to our channel and download the crypto app.